We do have a long-term strategy here at Financial Issues. And if you're going from an all-cash position, we encourage you not to just jump in all at once. We don't believe in timing the market. We believe that there's going to be ups and downs in the market. And if you look over the next 52 weeks, let's just say, there's definitely going to be a high and there's definitely going to be a low. You don't know exactly when that's going to be. So if you're starting from a 100% cash position, a great place to start is to go in little by little. So at the most, you could take a 12-month approach to building your portfolio. If you do that, you take your lump sum of money, you divide it by 12, and once a month on the same day, you be very disciplined about putting some money to work. So a 12th of the money to work at a time. Dollar cost averaging is where you put in set amounts of money into the same position at regular intervals. So that true dollar cost averaging works best with your mutual funds and your ETFs. You can do that with dollar cost averaging. Now, you still use that 12-month period to establish your stock positions as well. So we have guidance for percentages based on whichever age model that you choose applies to your situation the most. And there's a breakdown of how much of what percentage of your money should be allocated towards each sector. So a good rule of thumb, now it's not a hard, fast rule, but a good rule of thumb is that for your individual stock positions, so not your mutual fund and ETF positions, that you have between 1% and 3% of your overall portfolio in an individual position. So for example, let's just say that you're looking at a sector that has a 9% allocation to it. If you're trying to get 9% of your portfolio into one sector and you need to have between 1 and 3% in each individual stock, then you want to have between as little as 3 stocks, which is probably a little bit too few. So 3 stocks at 3% would be roughly 9 to 10%. Or up to no more than 9 stocks in that one sector, which is probably a few too many. So I think for a sector that has a 10% allocation, let's just say, I think you'd do good to have between, depending on how large your portfolio is, between 4 and 7 stocks in that one sector. So those are kind of the rules of thumb and the way that you get started and get your money to work little by little.